Welcome, everyone, to the epicenter of digital disaster. You are tuned into the only place that gives you the real story. Behind the virtual economy, the high stakes, high-octane world where pixel perfection meets cold. Hard cashed up, and folks, today we are talking about a massacre. Not on the server, not in the game, but on the balance sheets of the wealthiest digital investors in gaming history. Picture this: fortunes built on digital rust, empires constructed from rare patterns of camouflage, a black market estimated to be worth billions of dollars, controlled by the rarity of a single digital item. And in the center of it all, one company, the ultimate puppet master, Valve. They just flipped the switch. They just pulled the rug. They just sent a tremor through the economy of Counter-Strike that wasn't just a crash. It was an extinction-level event for the high-end skins market, the headline. Valve just wiped out the value of your most expensive Counter-Strike skins. But the truth is far more sinister. This wasn't an accident. This wasn't a bug. This was a calculated, cold-blooded maneuver designed to reshape the economy, consolidate power, and some are arguing, betray the trust of the community that built their billion-dollar market in the first place. Let's start with the victims. We're talking about the titans of the T-side economy, the collectors who held onto the $50,000 Dragon Lords, the investors who owned multiple factory new karambit knives with rare blue tips, the speculators who cornered the market on those perfect low-float crimson webs. These aren't digital toys. These are liquid, tangible asset species of digital art traded like commodities on global exchanges. And Valve just dropped a nuclear warhead on their holdings. The alleged mechanism of this digital devastation? It's classic Valve, subtle, insidious, and utterly devastating to the entrenched elite. It revolves around the introduction of a new system, possibly a new type of container or an obscure update to the trade-up contract system that fundamentally altered the rarity equation for years. The extreme scarcity of the highest tier skins, the covert and exceedingly rare items, was due to an impossible combination of factors: extreme drop rates, the limited supply from retired cases, and the sheer bad luck of trade-up contracts failing. That scarcity was the foundation of the multi-thousand-dollar prices. But now, rumor suggests Valve has done one of three things, or perhaps all three at once. Theory 1, the Floodgate case. Valve, without warning, introduced a new case or collection that contained a massive, unprecedented number of new, ultra-rare patterns that closely mirrored or even surpassed the aesthetic appeal of the existing grails. Worse, they may have significantly increased the drop rate for the rarest items in this specific case, effectively hyperinflating the supply of top-tier skins. Think of the most desirable AK-47 skins suddenly. There's an aesthetically identical, but far cheaper alternative flooding the market. Theory 2, the trade-up trap. This is the truly evil genius move. Valve changed the fundamental math of the trade-up contract. For decades, the community accepted the devastatingly high risk of trading 10 highly expensive classified pink skins for a small chance at an exclusive, high-value covert red skin. If Valve silently tweaked the contract, perhaps by guaranteeing a certain pattern, or allowing a wide range of case inputs that were previously impossible, they effectively created a new, reliable manufacturing path for previously impossible skins. Scarcity dies instantly when you introduce a factory. Theory 3, the StatTrak Devaluation. The absolute apex of the market was dominated by StatTrak items. The high-end investor treated a low-float, factory new StatTrak item like a priceless artifact. If Valve introduced a way to transfer StatTrak counters or simply introduced new, easier methods to obtain StatTrak versions of older, retired skins. The premium attached to those original impossible to obtain StatTrak grails evaporated overnight. That $150,000 skin just became $50,000, and its owner is now facing a $100,000 digital loss. The financial fallout is not speculative. It is a brutal, undeniable fact on the external skins trading sites. Within hours of the update, the price of several top-tier items, the Black Lotus equivalent of the CS world, plummeted by 30%, 50%, even 70% in some documented cases. Imagine owning a $20,000 item one afternoon and waking up to find it's worth $6,000. This is the reality for the high roller traders who treated the Counter-Strike economy as a stable, predictable investment vehicle. This wasn't just a market correction. It was a purge, and the reason why Valve would engage in such a disruptive, community-angering maneuver, control, consolidation, and the clearing of old debts for too long. The biggest winners in the skins game were the third-party websites, the cash out, trading and gambling hubs that operate outside of Valve's direct control. These sites created real-world liquidity for digital assets, making them immensely wealthy, but also siphoning transaction fees that should arguably be going to Valve. By intentionally crashing the value of the most exclusive, long-held skins, Valve accomplishes several key goals. They re-establish dominance. They show the community, the investors, and the third-party sites that they control the supply. At any moment, Valve can decide to make $1 million skin worthless. This ensures that future speculation remains tethered to the belief that Valve will protect new investment opportunities, not old ones. They generate new revenue. The crash forces the wealthy elite, who just lost millions, to start chasing the new scarcity. This means a frenzy of case opening, key buying, and trading, all of which funnel massive transaction fees and direct revenue back into Valve's coffers. They destroyed the old market to ignite a new, even more lucrative one. They solve a regulatory problem. The staggering, unregulated value of some individual skins has long been a source of legal concern, especially regarding gambling and money laundering. By injecting volatility and instability into the highest tier, Valve makes the market look less like a stable investment vehicle and more like a volatile, high-risk gaming commodity, potentially sidestepping future regulatory oversight. The human cost, however, is a different story. This isn't just a few hedge fund managers crying over lost billions. This is the betrayal of the digital archivist, the collector who spent years and often a fortune acquiring a unique piece of CS history. These are pieces of digital heritage, and they have been rendered irrelevant by a cold, calculating algorithm change. The community is now embroiled in a furious debate. Was this necessary to keep the game fresh? Or was this an unforgivable act of corporate greed, where Valve showed they have no loyalty to the investors who helped build their financial behemoth? We are watching a real-time drama play out, a billion-dollar digital market being reset by a single cryptic update. The old kings are dead, their fortunes turned to dust, and a new generation of skins are being minted even as we speak. The message is clear in the digital world. Valve is God, and God giveth, and God taketh away. And when they take, it's always with the intention of making more money in the process. This is the billion-dollar betrayal. This is the crash that will be studied by future economists. And it all happened because one company decided that the high-end market was too comfortable, too stable, and too profitable for anyone but themselves. Host, keep your keys locked. your float values close, and your eyes on those external markets. Because the digital bloodbath is far from over. We'll be back with a full analysis of the community reaction and the predicted long-term impact of this Valve move. Until then, don't get caught holding the bag, and remember, the house always wins!